Right, good afternoon, ladies and gentlemen. My name is Neil Robertson, I'm CEO of Compleat, and my presentation to you this afternoon is announcing the end of accounts payable as we know it, and what will follow. And first of all, I'd like to thank you for being here. We did actually hold a sweepstake in the organisation about how many people would still be here at 5 o'clock. So this is a bit like the after party when all the lightweights have gone home, and what we've got now is the really serious players. So I very much appreciate you coming along. If I could start off by asking, and just understanding who's here, how many of you are accountants in practice? So, okay, that chunk. And accountants in business? Okay, and how many of you are managing directors or senior managers in business? Perfect. There's roughly an even mix between all of you, and that's great because that's really the audience that we want to talk to. Last question, how many of you ever heard of Compleat before you came to Accountex? Look at that, none of you. And that's actually not surprising because our business is actually, we've historically sold to very much larger organizations. And I'll just give you a little bit about the background because it's relevant to what we're doing. I mean, fundamentally our business is extending the functionality of any accounting system, critically whether that accounting system is locally deployed or it happens to be a cloud, to deliver full-blown purchase-to-pay automation. And that is basically the ability to catch a requisition or request to buy, put it through an approval process, generate a purchase order, capture receipts, capture the invoice, do 2- and 3-way matches, and then post that transaction through into the accounting system. And we do that for a wide range of applications, but we start at the low end, Xero, QuickBooks, Sage Line 50, Sage Line 200, but we also go right the way through to the other things like Oracle Financials and SAP. Right now we have about 20,000 users of our application, and we're processing, or digitally processing, about £6 billion worth of invoices per annum. So we do have a lot of experience in this space. And I want to start this presentation with regards to a comment that was made very eloquently by the CTO of Sage, and I would like you to read that on the basis it's highly relevant to everything that follows. All there? Okay. So this presentation started about 2.5 years ago in a conversation that we had in a pub. And the question we asked ourselves was, given the technology and everything that's changed, how much of the accounts payable process could become fully automated? And what would you need to do to access the largest possible marketplace to make that highly attractive to accounting practices in terms of being able to offer the service to their clients, but also with regards to end users being able to adopt this technology? And the answer to that is the first one, which I mentioned at the beginning, is delivering the ability to plug and play connect to any accounting software, irrespective of whether it's locally deployed or whether it's in the cloud. And by doing so, be able to offer up to our application all the information about your suppliers, all the information about the general ledger, all of the budgets that you may be holding in there, so we can use that information in terms of the processing of transactions. And the second one is about driving productivity. Now, accounts payable, I was actually an accounts payable clerk as my first job in 1976, so a few years of experience there, is that it is absolutely perfect for machine learning and AI. And the reason being is the vast majority of the activities that take place there are actually very repetitive. And the other component is the fact that we can digitize invoices. And I'm going to go into a little bit more detail about the types of invoices you can digitize and what is happening there. And the last part, if you want the biggest marketplace in the world, is you need to add language. But that's all you need, because basically when you integrate to an accounting system, wherever you are in the world, you automatically inherit the local accounting rules for that particular geographical location. But our primary focus was to deliver this at a price point to the SME. So who's this important to? Well, actually, this audience. Now, the three major areas, they're the accountants in business, and they're looking for ways to basically improve the process and methodology that they're using. There are the accountants in practice who want to help their clients to basically be more productive, have better processes, be more compliant, and have more control, or indeed outsource their services to them so they can undertake them for them. But the last one is the most important, the MD, senior management, but particularly the MD. Because at the end of the day, irrespective of whether you're in practice or whether you're actually in business, the MD has to approve this in order for the change to take place. So what is the value proposition that you bring to them? Two other key components: financial intelligence. Is financial intelligence something that the organization does through management reports 5 to 15 days after the month end? Or is financial intelligence the information that an individual in the business, a manager, needs in terms of the conversation he's having with the supplier at this moment in time, in terms of the state of the account with regards to the deal that he wants to do with them? And our argument is financial intelligence is something that should be at front of house of the business in terms of giving a single real-time view of the truth, the financial truth, to everybody in the business. So irrespective of the conversation that takes place, you're all looking at the same information. And the last one, which is very much from the accounting practice point of view, but something we wholeheartedly endorse, is AP compliance best practice. And what we did was we looked at the Chartered Institute of Internal Auditors so we could benchmark the functionality that we were providing to make sure that we delivered that best practice in terms of the application. So what market does this apply to? Well, it sort of starts as you come out of shoebox accounting. So obviously somebody is getting the invoice and transactions and scanning them perhaps through Receipt Bank or auto entry, passing through Xero, QuickBooks, whatever it's going to be. As you move out of that, they start to employ people. Those people go out and start to buy stuff. So they have relationships with the suppliers. And in order to process the invoice now, when it comes in, it needs to be approved by more than just one person. Potentially they're going to approve it, and then perhaps it's going to be signed off. And if you're in practice, you'll see this taking place because the invoice that turns up for you to process has got more than one signature, or more than one signatures. So basically, as you grow past that, our proposition starts to become relevant. And it's targeted very much at MDs of growing companies. Now this happens to be my 7th startup. And in startups, you're a very small organization. Believe me, of all things that keep you awake at night, it is cash flow, especially if you're growing. It's knowing where you are at this moment in time. It's having sight of what you're going to need to pay each week, and literally weekly, so that you can decide how much you're going to invest in the business to drive growth and drive revenue, how much you can afford in investment of people, but most important of all, especially if you're a trading organization where you're buying in, the relationships you start to build with your suppliers to get off your credit card and onto a credit account, and to grow that credit account, because that's cash flowing your business because you've got your 30, 45 days, which gives you time to collect the money from your client where you use those goods and services. So those are things that are really important. And of course, as a CEO, I really, really, really hate wasting money on admin. So if you look at accounts payable in a really hardcore view, it's really the cost of that invoice coming in, putting it through whatever process that you have in place, to put a GL code on it, possibly a department code on it, and have it signed, and put it into the accounts. It is cost. That's all it is doing. It's additional tax on top of whatever it is that you actually paid. It's fundamental, and it's been the same as it was in '76 to now, but the goal is now to say, how do you remove all of the cost that you possibly can from that process while putting in a diligent best practice methodology that's compliant in doing so. Now, what you may not know is that for companies under about 10 million, whereby you no longer have to have an audit, is the accounts payable process is pretty much whatever your company has come up with in terms of getting it through the door, through the process, until be approved. And it is literally a wild west out there. Every possible permutation that you can think of is in place. And every time we engage with an organization, we're asking what they're doing, because it's not obvious, okay? And some people are really, really bad at this. In terms of the invoice comes in, yeah, gets signed off and it gets paid. Other organizations, very much more diligent. In fact, so diligent that they're doing all sorts of tests and checks and balances to make sure that the process of compliance best practice is taking place. And they have a small army of people in the finance department to perform this function, and the bureaucracy that they're putting onto the approvers is considerable. But they are doing it the best way possible. So, when you look at the process, in terms of capturing an invoice, getting it into your accounts, the interesting thing is no more than 10% of that work is actually putting a GL code on it, departmental code on it, and deciding who's going to approve it, and then getting it into your accounting application. 90% of all the work that's taking place around that is basically not that one bit. So, let's break that down. Two components. There is the labor component. The labor component is the movement of invariably a piece of paper, or potentially an email if you're sending the invoices out by email to approve, whatever it is, to move that transaction through the process. And somewhere in the region of 10% comes down to the knowledge. That is whereby you're using the skill and the ability of the accounts payable resource to add value to that transaction. What general ledger code is it going to, which approval it's going to, and actually a big chunk of their time is taken up with queries, but I'll come back to that. So, automation is about basically removing the labor content. It's always been true. I mean, you know, when I started in this, there weren't any computers out there. I sold my first accounting computer in 1979. Okay, so it was all manual. Nowadays, we do an awful lot of stuff automatically. This is just really looking at taking it the next step. So there's the labor content, remove that through automation, and then there is the knowledge content. And as I said earlier on, is the goal here is to see how much of that we can automate by using AI and machine learning. So in terms of compliance, for example, when an invoice arrives, we can look up the bank account details sitting in your accounting system, we can look at the bank account detail on that invoice, and we can make sure that they actually match. And if they do match, then it's a validation that this is actually the supplier that we thought it was. But then there's also the concept of defaulting. If an invoice is coming in, and it's always going to be going to the same general ledger account, and always going to be going to the same approval process, then why not set the system up next time it sees one of them, it simply appends that information and pushes it through to the approval. And it's when you combine the labor component together with the AI and machine learning component that we can deliver up to 90% productivity gains on the entire accounts payable process. And that's the game changer. Because not only do you achieve that, but you also, because you have the information at the very beginning, you can deliver that information to everybody in the company that needs to know. So, high-level overview of an accounts approval process. And it sort of covers all the key areas, although they're, obviously, as I said before, they're done in multiple different ways. The bit I want to focus on is the invoice register. The invoice register, I was taught, was the fundamental bit. The invoice arrives, you've got a record of it, and the idea then is you track what happens to that transaction, so when the supplier rings up and says, where am I on this, you've got some idea about where that transaction is. Something like 70%, 80% of the organizations we talk to do not have an invoice register. They are not aware exactly where those transactions are, and therefore they've got to start ringing around and speaking to people. So, from a managing director's perspective, the trouble with that is, I don't know how much I actually owe, I don't know how much is actually in the pipe, and that means that I invariably get nasty surprises with regards to an invoice that turns up at the most inconvenient moment in time with regards to payment. So, let's talk about the concept of what we're trying to automate from the very high level. There is a digital invoice sitting in the sales ledger of your supplier. And we want to get that digital invoice as a digital invoice in your purchase ledger, having been through an approval process with a general ledger and departmental codes and approval bits carried out. What is the most efficient way of doing that? So let's start off with the invoice capture and approval process. Now this used to be 100% paper. For many organizations it still is, simply because they print out the invoices when they arrive from PDFs. Again, you may not know this, but somewhere in the region of between 60 and 70% of all invoices that you receive are coming in via email as a PDF. I mean, would you agree with that? Now, that sort of volume? Few nods around the room. 3 years ago, that was 20%. And the reason that's happening is because I want to get my sales invoices paid, so I can print them out, put them in an envelope, put them in the post, and depending whether they pay first class or second class, it gets there in 1 day to 4 days' time for them to start the invoice approval process. Or I can turn on the standard functionality in every single accounting system, and it will generate a PDF and email it, in which case it arrives 100% of the time. It arrives instantaneously. It costs me absolutely nothing. Oh yeah, and it's green, because it doesn't require all the transport. Everybody is moving to PDFs. And the reason that we love PDFs is because a PDF is 100% digital representation of the digital invoice sitting in the sales ledger of the supplier. They have just given us all the data that we want. And because it comes in the same format, we can harvest it with all the information very, very simply. And once we set this up, so we onboard a supplier, find out where the detail is, and that supplier is onboarded, any one of our other customers, whoever uses that supplier, just simply happens. You do it once, and you can deliver 99.999% accuracy from a digital PDF. If you ask your suppliers to send them to you, they will. And the reason is, it's quicker, it's faster, it gets it into the system, and it arrives without you doing anything. Because once we've processed it, it's delivered into that invoice register, which I'll come back to. However, we also use OCR. And the reason we use OCR is there will always be paper invoices. They arrive in the post whenever it is, you scan them, and basically PDF them, and then we can process those. Same as everybody else. So, we've now got a situation where we have 100% e-invoices that have been received, the image, and also the data. So, what happens next? Well, if we look in, sorry, I just want to cover a bit about OCR. In terms of just where it sits, it's less accurate because every single invoice that you receive with OCR, depending on the quality of the image, determines on how much you can read. If it's been sitting on the floor of the van for 3 days before they actually bother to scan it, it is very much harder to read than if it's a clean copy. So whilst the paper is there, is wherever possible you get the PDFs, that's where the world's going. OCR is important to you, but we'll move on. So, we've now captured all of the invoices. So, as I said at the beginning of this presentation, our business is about being able to extract all of the information from the underlying accounting system so we can use it in terms of this process. And part of that is supplier validation. So, for example, now we can check the email address is the email address of the supplier that we expected to get it from, the bank account details, the VAT code. We can extract all the header lines and the line items and do a duplicate invoice check, etc. So from a compliance best practice point of view, it's far better than any manual system that you could possibly achieve. And if you compare it to the old process, all of that you get. At the moment, you're processing an invoice, paper invoice, because it lands through your letterbox on your doormat. So compliance best practice through automation is far better than manual systems. The other thing about capturing that invoice at source, the moment it arrives, you can see it. So if you receive the call from the supplier saying, what's the status of my account, you can see that invoice when you look up that supplier because it's in the system. And from a cash flow requirements reporting point of view, you can also see when that commitment is actually due. So now we're into real-time cash flow requirements reporting. PDFs are best because it's zero work and it's instant. So, with regards to organizations on 10 minutes, I said before, any methodology you can think of in terms of a process actually takes place. So this is where machine learning really comes into play. Between 60 and 80% of every transaction that you process will normally be allocated to the same general ledger code and also be put into the same approval process. The interesting thing about it is when you get towards 80%, the reason that becomes true is this is not just at header level, but also line level. So we get an invoice through from our marketing department, from our marketing provider. They look after our website and charge us for that, and they also look after SEO optimization. and so they charge us that. And those are two different items in our general ledger account. When I'm putting that invoice in the very first time, I simply say, right, this one's going to go to this account, this one's going to go to that account, it's going to go to marketing, it's going to go to this approval process. And then I default it. And having defaulted it, the accounts payable will never see that invoice from that supplier again. It will arrive, come in, the invoice is read, the data is appended in terms of GL and in terms of the approval process, and it drops into that approval process. Second thing is with regards to the approval process itself, is how many steps are there? Because it may be under 50 quid, somebody can approve it themselves. Over 150 quid or 500 quid, it needs to be signed off by a manager. Over 1,000 quid, it's got to be done by a director, and over 10,000 quid, it's got to be the MD. So when you set up those approval processes, you default that information in, and it's intelligent. So once the invoice goes into the approval process, it knows the steps it needs to undertake, and it will always undertake those processes. So from the point of view of how much of the process is now optimized, a very, very considerable amount. And what's happening is accounts payable is now starting to become focused on the exceptions, the things that aren't correct. Where an invoice, for example, is the first time you had a supplier on board, or there's an issue with it, or that it is not going to always go to the same accounts. At that point, then accounts payable get involved. I want to spend a bit of time, though, now talking about probably the most important part of this presentation, although you as finance people may not so, but the management people out there, the MDs and so on, probably will. And that is, think about the process that they're having to deal with. So the guys that you actually give the invoices to that ring you up and bitch about the fact that their supplier hasn't been paid despite the fact they haven't approved the invoice that's sitting on their desk. Or they've lost 2 copies and they're waiting for the third. Yeah, I know. They're two sides of the story with regards to invoice approvals. From their perspective, pile of paper, they're very, very busy people and they don't make it a priority, which doesn't help anybody. From the moment that invoice arrives now, it comes in, it gets digitized, either updated with regards to the coding by accounts payable, or it goes straight to them. It arrives and they are notified by an email to say there's something you need to approve with a hyperlink, and they can click on that and they can go and see that transaction. They can see basically who it's from, they can see where it's been coded to, they can see what steps of approval it's been up to now, they can see the invoice. Or they can just simply take out their mobile, look at it and go, yep, I'm happy with that, press the button, and that's now posted in the accounts. So, if you think about the methodology, supplier sends an invoice via email as a PDF. Hits our portal, gets digitized, gets dropped into the invoice register, gets coded to the GL, gets put into the approval process, goes to the approver's sitting on a train, yep, I want to approve that, I press the button, it's now in my accounts. I think you can see why this 90% productivity gain isn't, if you like, a wild statement. We have users that I think that they actually achieve more than 90% productivity gain through this process. From the approver's perspective, this is really nice and it's really convenient. However, what we're also doing is delivering them all of the information they need to be able to do the jobs that they have to do in working with their suppliers, in terms of getting best prices, in terms of making sure that as we grow, we can get better credit limits, and also just keeping an eye on the total spend. So everybody out there that basically works in the organization loves this automation because it's giving them all the information they need to do their job. But it's also, at the same time, starting to build the relationship with the supplier. Because the situation when supplier rings up, they actually basically will determine whether or not you're going to get better pricing or indeed a higher credit limit on how well you pay them and how much they trust you to be in control of your processes. And the better you are at it, the better relationship you have, the better credit limits, and as every MD will tell you, that is critical in terms of growing your business. You have to have those credit accounts. And what we'll also provide the MD with is a real-time view of cash flow requirements on a daily, weekly, monthly basis. It will include, obviously, all of the purchase invoices that are going through the system where they are and when they fall due, but it will also include the PAYE, national insurance payment, which is always a big one, so like second week in the month, the VAT, the payroll. So when they want to look at what cash they need at any moment in time, they can see it in real time. And I've not met one MD who didn't want that information. So, what about queries? There was a recent AP Association survey a couple of weeks back that says 30% of accounts payable time is actually spent dealing with the queries and the credit control calls. And I think that's pretty reasonable, and probably about another 5–10% potentially having the same conversation excuse me, with the people internally. And most of that time is spent getting the query, where are we on this? And then having to go and find out where you are on this with regards to the invoice, and have you got it, and do you need a duplicate and so on, and then getting back to them. None of which really fills them with a huge amount of confidence in terms of what's going on in the organization. Now, phone rings, call it up, you can see the exact status of every single invoice, where it is in the process, nudge the approvers digitally to get them actually to get it through, but you can also see if the approvers put it under query. You can also see if the approver not only put it under query, but send an email to the supplier saying, no, I don't agree with this, it's like 200 quid over the price we agreed, send me a credit note. And that's time and date stamped, so that conversation can take place. You don't need to speak to anybody. All the information you require is sitting in front of you. In fact, you could actually become proactive. You can say, look, supplier, instead of ringing me up 5 times a month, chasing me with regards to exactly where we are, can we have one conversation? I'll ring you on the 7th day of the month when we've got all your invoices. We'll do the reconciliation, and if there are any invoices outstanding that you haven't resolved the query, I will call you back in the 3rd week so you can get that credit note to me. And if you do that, you will stand out in that finance department of your supplier in terms of the amount of control that you've got. And believe me, that helps no end when you go back to them and say, look, we're growing like crazy, and I've got an option. I can either go and sign up with Fred Jones down the road, your competitor, because you won't give me the credit limit, and I've got to deal with 2 suppliers, and actually you're better than they are, or a 3rd supplier, or I want to put all the business with you. Will you please give me the credit limit? And if you can consolidate your suppliers, you put more volume through it, then you get cheaper prices. It's just good business. So building those reputation is absolutely essential, and this is providing the tools to not only finance to get these things through, but also to the management to build those relationships. And growing a business, cash flow is everything, that is essential. So, next bit, proposed payment management. Okay, so you've now got all these transactions in, who are you going to pay? For accounting practices, this is normally quite a difficult one in terms of saying, here's a list of everybody, I now need to confirm who you want to pay. So why not generate a list? And you could generate it by a supplier, you could generate it for each week, various different ways, and send that electronically to the MD to sign off, or the FD, whoever it is you go to. They'll go through and say, yep, I want to pay that, and that. Don't want to pay that one, want to pay that one, want to pay that one. And then you can basically go through your payment process. But you have a full audit trail of the fact that that was agreed, they have been told to pay it, and they have been paid. And similarly, when that payment takes place, you can also make that information available to all the senior management. So when they look at their suppliers, not only do they know which invoices are waiting approval, which invoices are under query, which invoices have been posted, but also which invoices have been paid. This is about financial management of the front of the business. So if the information is there, you can decide whether you provide it. And what about month-end reporting? Well, we are maintaining a real-time accrual of everything in the system. So you could, if you wanted to, wait 2–3 days for the straggler of the invoices coming through, perhaps 5 days, but simply snapshot that, irrespective of whether it's been approved or not. There is your accrual, export it to Excel, and then basically send that CSV file through as your accrual into your account system, and the information's there. So there's no work whatsoever, because all the information you need to put in relating to your supplier accrual is available to you. In terms of reporting, why would you? Every piece of information, instead of being 5–15 days out of date when the report turns up, is now available in real time to everybody who needs to know. They are naturally going to go to this application to find out what it is, so you don't need to report on suppliers. I mean, you can do. It's just that I think a number of you know when you produce member reports, it's frustrating how few management actually bother to read them and digest them. So why not give them the information up front and basically all take our world from where it was historically to actually real time on the process. So now, let's look at that process we put at the beginning. The reason that the paper invoice is up there is because you've still got to bundle up and scan them. And we can't get rid of that bit because they're paper. But once you scan them, we can deal with it. All the other processes have been removed. And in terms, or 60, 80% of them have done, in terms of the fact that we can automate those processes. For a business that's got an appalling purchase invoice approval process, then we'll save you about 65% of your entire labor around that. But the more compliant, the better practice, the more diligent your accounts approval process, the more time that you will save. And I said before, up to 90, 92, 93% of all the work for accounts payable simply vanishes. And here's an oxymoron, okay? I want to put in compliance best practice and tick all the boxes in terms of audit compliance, and I actually want to automate the process. So we're delivering 90% productivity gain and delivering an infinitely more compliant best practice process than you will ever be able to deliver manually. Because we've got an audit trail of everything from the moment that transaction was processed or caught all the way through to the time it was posted into your accounting system. So, selling. Sorry, it's a dirty word normally for finance people. If I get a call from my accountant at any point during my career and they say, I want to talk about compliance best practice, it's not a happy call from my point of view, because what that means is cost. It probably means cost in terms of the accountant coming in and actually spending time with me explaining to me why our systems are rubbish and we need to do something about it. But it also means cost in terms of then the resource, time and effort I need to have in terms of the resource to do the bureaucracy in order to tick that best compliant box. If you want to start a conversation with your MD or with a client, or one of your clients' MDs, I really strongly suggest don't start there. Okay? That is not a good way to start the conversation. But how about starting the call where basically what you're talking about is saying, hi, we found this piece of software, and I think you're going to like this, and we'd like to come and have a conversation with you. Why? Well, on the cash flow front, it will tell you exactly where you are from the moment the invoice arrives, so you can plan your cash flow more carefully than you're able to at the moment. It's going to help you build your relationships with your suppliers, not only because you can pay them on time, but because they'll gain trust and faith in you, which means that as you grow, you will be able to grow your credit limits with them. Oh, by the way, we can cut your admin costs by anywhere up to 90% and release that resource to do more productive work for the business, but also for the individual. They can move on and learn new skills and actually add value to their own careers. And we can remove things like duplicate payments, but we can also virtually permanently slam the back door on fraud, whether it be internal fraud or now the industrial fraud that we're seeing coming from the outside world. Why? Because we have the process in place to make sure that those invoices are captured. And for accounting practices, it's about getting through the front door, a reason to talk to your clients. And this, we found, is a very successful reason, and I would suggest that if you want to move on with this, then that's the place to start. Go and talk about the value to the managing director and the director of the business, and in the background, you also get everything that you want from it. So, is this going to happen overnight? No. I thought I'd bring out an analogy, one I saw in my career. In 1984, there was everybody in the world basically had typing pools. You know, they did. That's how you got things typed. You know, there was no fax machines, there was nothing. It was basically manual, and it was all filing. Word processing came in, micros came in. By 1989, there was probably not one single typing pool left in the UK. Well, actually, there probably was, but it would have been a very, very old school company who didn't want to change. But the reason was the value was so great that everybody made the transition. So the one thing I've learned in my career in terms of bringing new software products to marketplace is the value and the benefit of being the early adopter. Oh yeah, a little bit of risk in terms of the lumps and bumps, in terms of getting this thing to the marketplace, doesn't do exactly what you expect. But the real benefit is that you actually learn it, that you understand it, that you start to build skills around it. And for accounting practices, is that you start to distinguish your capability and your reference sites and the comfort that you have. So as the other people come on, then they are now starting to have to compete with you. And certainly start with your existing clients, but it doesn't take long to actually start introducing this to start winning new clients. And at that point, it becomes Darwinian. Because at that moment in time, you are becoming the hunters. You are going out there and you are putting this proposition to organizations that are working with another accounting practice. And by default, they become the prey. Early adopters always take dominant market share and then maintain it throughout my entire career of all the technologies I brought to marketplace. So it does make for an interesting opportunity. Now I've got a couple of slides left at the end that I just want to go through, but before I do that, are there any questions at all? Gentleman at the back, thank you.
Yeah, I work with construction companies and we have costs that we want to allocate to each project. How do we do that with your system?
Well, certainly from the point of view, are you using project costing?
Yes.
Okay. Within the application, we actually will be picking up the underlying capability. Which accounting software you're on?
We're using Sage.
50?
Yes.
Great. Okay. We can pull through, and using the job costing capability in Sage 50, we can pull that data through. So effectively, when you're looking to code it up, it will be showing you the job. So you'll be doing the GL coding and so on, and you will also be able to put it to the job as well. And this is the key thing about the integration capability we have, because if you can imagine, very large organizations get incredibly sophisticated, then that ability to actually have a API, if you like, depending on what the accounting software is capable of doing, we can pull that information out, and if the API is there, we can push it back in. And on Sage Line 50, it's something we've done many times. So you would have that analysis. And indeed, there are other areas such as not-for-profit pushing it through against a particular fund in terms of the costs, and we can do that. So it's pretty much sort of whatever you're doing at the moment, we can replicate. Oh yeah.
Hello. Whereabouts does the document get stored? So once it's submitted to your software, where does it sit? Where is it stored? And is there a reverse lookup from our accounting system to be able to go and view that document?
Yeah, I think in terms of the technology we're using, it's on Azure, Microsoft Azure data centers. Currently in Dublin, but that will be moving to a UK one before Brexit. So all the information is held there because we can sit behind their security systems and so on. Incidentally, with regards to the amount of data, we don't charge for data. You can have as much data as you like. That's included within the price. Obviously, it's fully redundant, it's backed up, etc. And so I've forgotten what the second part of the question was.
The lookup from the accounting system to the actual original document.
Yeah, that very much depends on the accounting software. So what we're able to do is we have a digital image of the document, of the invoice. If the API of the accounting software allows us to push that information through, then we can deliver it so that you can see the invoice sitting within your accounting software. If your accounting software doesn't allow us to do that, then we can't. But I think the interesting thing about it is that there is a migration, because everybody thinks, finance-wise, I've got to go to the accounts to get the information. Well, our application is holding infinitely more information than the accounting software, because the accounting software is holding effectively the transaction we push through that might just be at header level. It's got no line level detail, doesn't know what it is, doesn't know what the approval process is, and. So everybody tends to migrate across to getting the information from there. But we can do it if the accounting software allows it. How many we got? 5 more minutes. So any more questions? Great. Okay, I'm just going to finish off. And this is really, there's one part of the presentation that I haven't talked about at all, which is actually the diligence of the approver in terms of looking at that invoice and making sure that it actually does represent what they got, and it is actually at the prices that they agree for whatever methodology they use to raise the order. So how do we deal with that? And this is really our primary business. It's about this ability to create an order. I mean, we're going to be here at 3 o'clock tomorrow afternoon. If any of you are, please do come along. But I just want to give you a taster with regards to the proposition. As it says, our philosophy in life is very simple. all financial management takes place before you make the commitment to buy. And everything else that follows is purely the cost of accounting for it. And therefore, the goal here is saying, what do we need to do to address that? And the answer is very, very simple. You need to start capturing the ordering process. If you're capturing the order, there's quite a common argument comes out saying, oh no, they'll never be capable of doing that. How many of here has never bought online? Yeah, we all have. So everybody in your organization is an absolute expert at going out, finding what they want, deciding they've got enough money in their bank account for it, and going and buying online. If the experience that you give them is very, very similar to the experience that they get online, they adopt it like that. And the reason being is a lot quicker than whatever they're doing at the moment. And if you capture the order, it means that basically when the invoice comes in, you can automatically reconcile the invoice against that order, validate the values, and again, it's the visibility. The only difference now is you can see that commitment that you're going to have to pay in 45 days after the invoice arrived at the moment it was generated. And you have control over whether or not it was actually raised. But I won't go into any more detail than that at this moment in time. So the cost of everything that we pay is actually reflected by the supply chain. And the decimation we're hearing about in the retail sector is simply that the online retailers are shortcutting the supply chain. They are removing the cost associated with the retail part of it, which actually is normally 50% additional cost, because every step involves their own profit. What would happen if we did the same? We removed the steps in the process, so that from a point of view of what you pay, it is simply now a reflection of what price we can collectively leverage. Because procurement as a service is saying that we're spending 6 billion quid, or sorry, our customers are spending 6 billion quid. We have information relating to what they're buying, disconnected from them as individuals, and there is a big market out there of wholesalers and manufacturers that want direct access to market. So what happens if you start to automate that process and you deliver it as a service? And what happens is the answer is the price goes down. So on our enterprise product, we're announcing tomorrow, so quick preview for you guys, the availability to buy buy goods and services, predominantly office-related products, cleaning materials, stuff every company buys, and it will save you between 10 and 20% of whatever you're paying at the moment, whoever you're buying it from. And for organizations turnover 1 to 2 million quid, that's more than cover the cost of our software. But I think I'll leave you with one advantage, or one example. One of our clients who does spend a lot, they run a franchise of Starbucks and KFCs, is that on a relatively small proportion of their spend, we were able to save them 57% over what they were currently paying. And believe me, because I sold the system, they were diligent in terms of getting the best price. And that represents over £100,000 per annum. And that is a 10 times cash ROI over what they're paying for our software. So what Compleat is about is basically bringing together all these component parts. It is talking about using technology in terms of the way we capture invoices. It is the automation of the process in terms of putting it through the approval and getting it into the accounts. It's the delivery of the information in real time to the business that need it, whoever they are in the business, and it is also now the reduction of costs in terms of everything you buy by using technology and simply doing what everybody else is doing, shortening the supply chain, but doing as a collective. The more we all spend collectively, the better prices we'll be able to pass on. So, I'll leave you with this thought to ponder. What will be the implications of all of that? Because what I just talked about on procurement, that's free. That costs you nothing. Okay, with regards to our enterprise product, it will become available for iComplete sometime later this year, and it will be delivered to every single invoice automation site we have out there for absolutely nothing. You will simply be able to go and buy stuff cheaper than you can do on your own. And from our experience, when we're talking to MDs, that's kind of the icing on the cake in terms of the proposition. And actually, I'm on time to the second. So thank you very much indeed for your time.